Good afternoon, everybody. Welcome to Trader Merlin's show. It is Halloween, and I told you I would wear a costume. You may not think this is a costume today, but for those that may not know, if you've watched the Olympics, we've got and I told you I'm not standing up. This is the French pole vaulter. My name is Anthony Amorati, and if you don't know what was so humorous about this costume, I would encourage you to just type in Anthony Amorati Olympics. Missed on a medal because of how do we say this? Is it a handicap? Would you call it a handicap? Anyway, I wore that as a party, and it's funny because I just went to Home Depot to grab some stuff. I did not wear this costume because for fear of being inappropriate with children around. So I wore my Australian breakdancer outfit, which I also have. Unfortunately, during the show, I won't be able to do a quick change for you, but I also have the Australian breakdancer, which is much more PC. But yes, the French breakdancer, or the French pole vaulter, I gotta say, was a pretty big party hit. It's one of those ones that a lot of people looked at me and they went, I don't quite get it. And they looked down, oh, I get it. Oh, wow. Yeah. Anyway, fun party. Happy Halloween, everybody. Not so happy for our equity markets today. You had some nice big red candles. As I saw here in the chat, I think that was from Steve, says, good day to be selling puts. Yeah. It was a great put selling day. I sold some today, and just for next week, getting over 1% rate of return on a couple of them. I'll let you know what those are here in just a second. But let's run through it. So we had the earnings yesterday with Meta and with Microsoft, and on those earnings, Microsoft looked pretty good. Meta not as much, but after the announcement, we thought maybe we'd have a pull up in this market. And I guess in the conference on the call, they really talked about kind of disappointment in the cloud storage side going forward, and that had a lot of people spooked. And there was some other information that came out with regarding NVIDIA and some of their top customers, things being like Tesla, super microcomputer, other companies as well that are scaling back their investments in servers from NVIDIA. So what do we see? Well, heck, we saw a damn big move down today. NVIDIA was down 4.72%. Now, I certainly wouldn't say that this is over. We've got that trend line drawn on here, so, it's not horrifically bad. Yes, Glenn, I will not be standing up today. You guys are great. I didn't see all the comments here today. Hi, all. Where is the Halloween costume? Lisa, you have to look up Anthony Amorati here. I'm not going to stand, but I actually have the name on the back of my jersey here. I'm a French pole vaulter from the Olympics, and if you YouTube it, you might see a funny video for him. No, I wouldn't be a soccer player. That'd be too boring. I like my costumes either to be epically built or have an edginess, humor side to them. So I'm Anthony Amorati, who is probably the most famous French athlete from the Olympics, and he didn't win anything. Oh, he won all right. He won the hearts and souls of ladies and men, possibly, all across the world. All right, I'll leave it at that. Are you excited to... I'm excited to be here today. That's why I said I will not be standing up. All right. So with regards to what's going on, this tech kind of, not nightmare, but this kind of scary market Halloween that I brought out, it really put a damper on the end of the month. I'll run us through our top 7 markets here and how they performed for the month of October. All in all, it wasn't that bad. It wasn't the month that a lot of people had predicted. Typically, October, you get the biggest sell-offs. Today was probably the biggest sell-off of the market for the month of October, so nothing too dramatic. Now, if you look at that trend line I've got drawn here on NVIDIA, all still looks good, right? All still looks good with NVIDIA. However, it's getting weaker. Of course, we had that big breakdown from the last 5 days of consolidation. Now you're coming near this low, and I think we have a similar picture on some other indexes, where this low from October 15th is now a fairly important one, because then it would really start to create a new pivot low or a swing low. So keep your eye on that one. It's about 128.74 on NVIDIA, but NVIDIA wasn't the only one getting crushed today. Microsoft also talking a lot about their cloud storage, and we had been looking at this one, and Microsoft, I felt good with it. Felt like Microsoft was looking great. You can see you've got roughly a very loose trend line here. We'll go through the more points of contact. And from this point, you did break that today. So not looking great on Microsoft. We actually broke not only that, but that swing pivot right here with this low on October 8th. So all in all, this is pretty bad. I mean, yesterday it looked okay, and then all of a sudden, it just came crushing down. So this is pretty bad. You had Apple as well reporting earnings today. So Apple's earnings, I'll just click on the box to get them for you. Actually, I'll just do it this way. So Apple actually beat their earnings. They were supposed to come out at $1.49. They came out at $1.64, and they're down 1.12% in the after-hours session. Again, I think it's a lot of people concerned about AI in demand. Remember, we mentioned this a while back that there was heavy investment, and Sundar Pichai of Alphabet was saying, the CEO of Alphabet, not Sundar Pichai, was talking about how they'd spent all this money and weren't seeing a rate of return yet on it. And then all of a sudden it turned around, and now they said, hey, we are seeing a return on it. I'm sure that the question that everyone has in this tech sector, and if you look at that Magnificent Seven, it was a bloodbath today for all of them. Everyone's question is, okay, will we see big CapEx expenditures for AI going forward, or is that done? If it's done, then that means NVIDIA may be cooked here for a while as well, if these companies are not going to buy more and more of their chips. So interesting turning point in our market here today. I'm not quite sure what the long-term piece of it will be. I did look at a couple of opportunities today, and we'll get to those here in just a second. But I wanted to go to a couple other ones. SMCI was another one that continued its sell-off today, down another 12%, right? It was down 32% yesterday, down 12% today, and down another 1.5%. This is one I'm not interested in. Again, Ernst & Young, their auditor, has walked away. And the big concern with SMCI is that they'll be delisted. So part of regulatory compliance with the SEC is you have to have an auditor, somebody to go back through and third party, make sure your books are okay and everything is on the up and up. Well, if Ernst & Young, which is one of the big firms out there, has walked away, I think that there's concern that no one's going to want to be their auditor. Right? Who's going to step in there if Ernst & Young is looking at it going, no, we don't want to touch this stuff. This looks bad. So, for those who are selling puts on Supermicro or trying to buy along on this dip because we are into demand zones, I say you got to be really careful. This is the one that could potentially be delisted. If it does get delisted, the price could drop significantly, even more so than it has. So be very, very, very careful because it's heavy investment, but no monetization yet. Meaning with AI, yeah. Tomasina, my name is Anthony Amorati, and I'm a French pole vaulter, which may not seem scary or humorous until you look up who Anthony Amorati is. You can just type up Anthony Amorati Olympics, and then you'll understand why I won't stand up today. All right, so those are some of the big plays being made today. When I was in between sessions and meetings and stuff, did go out and make a couple trades. Actually had 3 orders that were sent out today. One of them, there's my chainsaw juggling with SMCI. Yeah, I wouldn't touch that thing. It's just too risky. Now, I did take big risks today. I did sell puts today on Boeing. And if you notice today, Boeing, I'll zoom out just a hair here. Boeing had a pretty ugly down day. It was really most of the pain was early in the morning, then it kind of went sideways for the rest of the afternoon. I sold the 140s today. I sold the 140s expiring next Friday, so literally 8 days worth of time on it. And received 75 cents. So that's roughly a little over 0.5% for 8 days worth of hold time. I'm okay with that. I don't think I'm going to get hurt too bad over the next 8 days. For it to fall to that 140 level and exercise me, it would have to drop. Let me get the exact numbers here for you. It would have to drop, let's see, right around 5.76%. Now, granted, it dropped 3.23%, and if the fear does precipitate in these markets, there may be more downside. But I don't think I'm going to get hurt too bad if it does continue to fall here. I do love selling, short windows of time. So getting over 0.5% for 8 days to me was worth the risk on Boeing. Now, the other one that I did grab, which is probably much more speculative, and I'm hoping I get executed on this one, was Coinbase. I know some of you have been following the crypto world. Obviously, the move down today in Bitcoin had a factor in this one, right? That says not Coinbase. Let's go COIN. There we go. Big red candle today, and the premium was off the charts on this bad boy. It was great. So I sold the 160s So it's just going to be right here on the screen. Come on, I'm trying to get to 160 exactly. And the reason I chose the 160 is it's just kind of down below this whole sideways basing where you had a drop base rally out of it. I kind of like that area of demand. And for it to get to that level, it would have to fall from current prices roughly, I'll call it 11%. Now, this one had some great premium. I sold the 160 strikes expiring in 8 days, and I collected $3.40 worth of premium. So essentially, I'm going to be getting over a 3% rate, over a 2% rate of return for 8 days on Coinbase. And I'll be honest, I'm fine owning Coinbase. Remember, if the election goes, well, if the election happens, there'll be a changing of the guard. We know that's going to happen on next week. If Trump wins, we know it's going to be pro-crypto. That's great for Coinbase. If it's going to be Kamala, then we know that there's some pro-crypto. Certainly there'll be more questions around her administration's view on crypto, but I think it's a win-win. Therefore, I think that Coinbase is going to be a good play for the intermediate term, certainly going through this election. And if we do get a bull rally, as I am anticipating with Bitcoin and have been anticipating starting now, then there should be much more upside here. So I kind of hope it falls to 160 by next Friday and executes me. I'll sell puts again and continue to acquire some Coinbase here and move to the upside. Hopefully, I am not proven wrong by this one. So those are the two. I think the other one I was looking at was KLA 10 Core. I can't remember. I think I had an order out here for KLA 10 Core. I think it was at the 620 because it was right below these lows, but I didn't get executed on it. I had an order out there for like 750 or 770. Premium was really high on that one as well, but it didn't execute me. And fine, move on. Let's see, what do I have here? So Steve says, Merlin, say that the top is in for NVIDIA and you have a substantial gains you don't want to pay taxes on. What strategies can you exercise to profit on the fall without tax implications of selling? Well, first and easiest is just to buy puts, right? Hedge yourself with puts, find your delta, and find out how many put contracts you would need to buy to cover your position, to cover it 100%. And then if it falls, you don't lose any money. If it stays right where it's at and doesn't fall any further, then you would just lose the premium that you pay. Unfortunately, today, the premium for NVIDIA shares is going to be much, much higher. And I got to put an options platform on this one up here. I don't have it on here right now, but the premium, because of today's slide, at one point we're down over 6% on NVIDIA. You know, you're going to be paying a pretty penny to buy those puts today. It's one of those things that as we came up here into this double top going into earnings season, that would have been the right time to do it. We'd addressed this on the past earnings season on how companies had spent so much money on NVIDIA products and services, but they weren't seeing the rate of return. And that kind of, in my opinion, should have foreshadowed a little bit here the NVIDIA situation. Now, if these numbers do continue to roll out, and of course all the FANG stocks or all the Magnificent Seven stocks have rolled out except for NVIDIA, if companies continue to scale back that investment on those H100 chips and A100s and A whatever the new chip is from NVIDIA, then NVIDIA is probably going to post subpar earnings. Because it sounds like these changes that were made on Microsoft's side, on Alphabet's side, on Amazon and Apple weren't just done last week. Like they've been slowly curtailing their purchases of NVIDIA products, yet the market seems to be pricing in that they're buying even more and more and more. So I don't think that this is the end for NVIDIA. Certainly not. I just think that there's going to be a pause in consumption of those NVIDIA chips, and that may cause NVIDIA to drop a little bit. So, buying puts on NVIDIA probably is the single best way to protect yourself on this one, but you'd have to do a little bit of calculation to find out exactly how many puts you need to offset the position that you have. Remember, each contract's 100 shares, so shouldn't be too difficult. But yeah, earnings for NVIDIA, by the way, let's get rid of that. Earnings for NVIDIA are going to be happening on Wednesday, the 20th of November. So you got about 3 weeks out till NVIDIA reports. But most of their customers, Supercomputer, Apple, and all these guys have already disclosed their earnings, and people are scouring through it trying to find out exactly where that money's going, and not as much is going to NVIDIA. So that definitely makes it for a scary market Halloween, and we saw some pretty good slides today in our broad market indexes. I just showed the S&P. I'll start at the bottom and work my way up, and then I'll go to the monthly returns. You had this nice move down in Bitcoin today, and we talked about it once it reached those highs the other day, right around that 74,000 mark. Expectation was we were going to stall out. we're going to have a little bit of a retracement. I thought 70 would be your logical stopping point today. What do we get to on futures? $70,080. So there's the pullback I was expecting. The question is, does it stop here, or do we go a little bit deeper? I think we'll stop here and start to move back up with regards to Bitcoin, but we'll have to wait and see. All in all, I still like the chart. It still has strength. Bound to have a pullback here and a little bit of a breather, and we'll see if there's more upside going on. All right, NASDAQ. What put would you buy with NVIDIA? Well, I think a lot of that would depend on what your position is on this, Les. Like if you've got a really, certainly you could look at your strike price and go deep out of the money on this one. But, if you buy the puts that are deep out of the money, they're going to be much, much, much cheaper. So I guess the question would be, do you believe that NVIDIA is going to have a prolonged sell-off, or could this just be a really sharp down move piece? So I don't know if I could specify what strike price to go to. Yeah. I don't think I would know exactly what strike price to go to. Typically, if I'm looking at a situation that I think it's just going to kind of be sideways, I might do at the money. But the premium, again, is going to be very high. If it is something I think that there's going to be a much bigger sell-off here, and if all the customers in NVIDIA are scaling back, that might be, and I don't think that's going to, implode, but it certainly could have a bigger pullback. Now are you looking at that, the 110 mark? Are you looking at the 100 mark? You could probably get those very cheap right now. Not very cheap. I mean, obviously, they're going to be higher because of the sell-off that happened today, but they'd be cheaper than trying to buy anything out the money. So go out of the money there a little bit. Margaret says, have I ever sold Bitcoin? Yes, I have sold Bitcoin, but not in mass. So typically when I'm selling Bitcoin or selling any crypto, it's as an example in the classes that I teach to say, here's how you go through the process of selling, cashing out. Part of that 5-step transaction process, it's actually a lesson that we have is, how do I take my dollars, move it onto the exchange? How do I buy crypto? Once I have it, how do I actually send it anywhere else? How do I send it to cold storage? How do I move it from cold storage back onto an exchange? How do I sell it? And how do I get back into cash? So I use it in that example, but as far as my long-term holdings of Bitcoin, like my big quantities, no. Haven't sold any of it, don't plan to. I did sell my Ethereum and Litecoin in 2021, right as we started crashing. It was great because I bought back like 30% cheaper, but it continued to fall even more. But no, not selling my core holdings of Bitcoin anytime soon. And again, as I mentioned, we'll look at that next year. As we get into September, October of next year, I'll have to make my decision there on what I want to do. I'm hoping and I'm optimistic that once we get to September of next year, we'll be looking at a 6-figure price for Bitcoin, and hopefully something that's more than low 6 figures. Give me mid 6 figures would be fantastic. Then I have to ask the question myself, is this a good enough point just to walk away with it? But no, I haven't sold it yet, but I'm looking forward to it. So there's part of it. I think I was going to continue on up here. It's almost to the top. So that was the S&P. Looked at that Russell, which for the month has been the weakest. It's also pretty weak today, now 1.72%, but better than the broad market indexes. Why? Because there's no Apple, there's no Amazon, there's no Microsoft, there's no NVIDIA in those. Those are much smaller. 1.72% slide today. Gold, finally having a sell-off. This is probably the biggest down day. It's the biggest down day in gold, in months. I think this one back here from June might be bigger, June 7th. Other than that, we haven't seen big sell-offs. 1.84% slide today, 27.49 for gold. About time. I think we'll probably come back down to this line I drew on the chart, which is at 2,728. Retest that and then bounce back to the upside. So for the podium today, you got your 10-year, which is still continuing that trend to the upside. There's certainly a lot more concern from a political level too. I'm hearing more senators and presidential candidates talk about the housing market and about yields and interest rates, which of course impacts inflation as well. So this is not a big change in our new session, down 0.09%, but the trend overall looks to be up, and I'm still very bullish on the 10-year yield. Dollar index was down 0.2%, finally getting a little rollover after we came back to that supply level, right where we put it, 103.50, hit it. Now you're getting the pullback. The question is, how deep does it go? My guess is we'll probably go back to about 103.50. So you got a little bit of a downside move there. And then finally, crude oil. It was up big today, gave back most of its gains later in the session, finishing up only 0.95% to $69.26. So all in all, when you look at this chart, there's certainly a lot of volatility that did happen for the month of October. However, where did my... I was going to show you something here, but of course, in my haste to get things done today, I have messed it up. So let me go and change something here real quick so I don't look like an idiot. Well, more so than normal. All right, there we go. So now let's go and look at your monthly results just to see what happened. Remember, October is historically historically one of the worst months from a volatility perspective. So a lot of people looking for big crash. Nope. Let's go, actually, yeah, Big Ab, you mentioned that one as well. That's actually pretty good. So you could do two things. Yep. Buying puts directionally would be choice number one if the premium was right to protect that NVIDIA position. Buying puts directional. The other side, which you're right, I didn't even bring it up, is you could sell calls. So if we go back to this NVIDIA chart, let's say that your average price, just move a line down here. Let's say your average price, I don't know, is $120, right? Split adjusted, whatever, it's $120. And we're currently sitting here at 132. If you had a pretty strong conviction that we're going to go lower, you could sell calls against your position. Now, you probably make some pretty good money if you sold them at the money. And you could do these weekly, but that's assuming that you felt that prices were going to go lower over the next few months until they got to their earnings. So you could be selling covered calls. If you really didn't want it taken away and you just wanted to, earn a little bit of extra money, sell them above the all-time highs. So sell those calls at 145, right? Selling a 145 call, that means it have to go all the way back up to all-time highs and break through, which it certainly could do, but that runs you the risk. And remember, I think Big Ed, the primary concern was, I don't want to take a tax hit on this. So one of the big risks that you would face with this, you're doing yourself a service by selling calls, earning premium, and essentially lowering your cost basis on your NVIDIA shares. Great, that's fantastic. But if your concern is you don't want to take the tax hit, then I would not sell covered calls. And the reason is, if all of a sudden NVIDIA ripped to all-time highs, you're obligated to get rid of your shares, to sell them at that price, unless you buy those calls back, and of course you would be losing money on those. So you could do both. You could do both of them. I just think that if the concern from Steve was that he doesn't want to sell his position, I probably wouldn't sell the covered calls. But it's a great tactic. Maybe just sell them so high, do a weeklies, but sell them way up there and just collect a little bit of premium. That's one thing that you could do. But you're always going to be at risk that NVIDIA has a blowout in earnings and shoots up to all-time highs, and now your shares are taken away and you're paying the tax hit. So if you don't want the tax hit and really want to guarantee you're not going to have the tax hit, buy puts directional. That's it. All right, let me go into our top 8 markets for the month of October here. Obviously, well, not obviously, but let's start at the bottom, work our way to the top. Your worst performer, Russell 2000. Now, again, I have been bullish on the Russell 2000 simply because if dollar is going to continue to be, or interest rates are going to continue to get cut, then that should bring money into small caps. Well, that did not help this month, down 1.92%. You can see really over the past two to 3 weeks, it's been a pretty big sell-off for it, most of the loss happening there. If you go to the next place finisher, you guys haven't sold calls on Amazon, Google, or NVIDIA. Don't want to risk losing the position. Yeah, there you go. So you know that, Steve. If you know you don't want to lose the position, then I wouldn't be selling covered calls. For me, I don't worry about that. If I get the position taken away from me, that means I made even more money, and I'm happy with that typically. So, all right, next on our list, S&P 500 down 1.31%. Not really that bad, and honestly. Most of it is just the last 2 days. If you look at the last 2 days of activity, you had a decline of 2.46% on the S&P. So until 2 days ago, hey, we were having a pretty decent month. I'm going to go to the very beginning here just to see what the overall month looked like. But here is the first day of October. Up until yesterday, we were having a 1.1% gain for the month for the S&P. Now all of a sudden, ending down 1.3%. So boo! There's your Halloween spooktacular for the S&P 500 just the last 2 days. Moving up our list here, going towards the top, NASDAQ 100, of course, it's a similar picture. It's really the last 2 days. We were looking fantastic. If you take out the last 2 days, this chart looks great I'm feeling bullish. It's right near the top of that. It hasn't broken out. It actually broke on Tuesday, but didn't close outside that yellow box. But still, the trajectory of it looked fantastic, and all of a sudden, we broke out of it and then came screaming back down. Man, bull trap on the NASDAQ 100, and we can thank Alphabet, Meta, Microsoft, and today you've got your Apple and your Amazon to thank for that one. Next on the list, moving up, dollar index. So notice the jump. Our indexes all down for the month. NASDAQ, S&P, Russell down. Of course, I don't put the Dow on here because I don't like the Dow. But we jumped from negatives to positives all of a sudden, and very quickly. The dollar index up 3.11% for the month. The Dixie looking great. I mean, even with the last 2-3 days worth of sell-off, it is fantastic. I mean, this has been one heck of a month. If we go from just the low here, which was actually September 27th, to our peak, dollar rallied 4.47%. What does that mean to you and me? That means for you and I that if you go to Europe, you can buy 4.4% more stuff. If you go to Thailand, you can buy more stuff. Now, maybe not 4.2, depends on the country's currency, but you can buy more and more and more stuff. That's great if you're going internationally. So we certainly like to see that if you're a traveler. You like to see other currencies falling, which is fantastic as well. Next on my list, and by the way, I don't see this stopping. I see this actually pausing right now. I see it selling off a little bit and then continuing that rally to the upside here for the dollar index. Dollar just on a monster. Yeah, exactly, right, Steve? It's crazy. And, the tricky part about this dollar is, you can have a mindset. And what were we saying here? Actually, what were we saying here? Everyone, not everyone. I don't want to put everybody in the camp. But most people, I'll just say I was thinking, stay short the dollar, right? We were saying, stay short the dollar, go long the yen. We were making lower lows, lower highs, and then once we started consolidating in this yellow box, we just drew the yellow box around it and said, okay, if it breaks above that 101.90, get out of your short position, go long. If it breaks down below that 100.48, then just go continue adding to your position short. And then all of a sudden, we hit that bottom. We got that head fake where it broke below it and then screamed and been ripping ever since. So, that's just the nature of the beast. And on that one, you could be looking at this chart saying, I'm right, 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 I'm wrong, and eat away a lot of your profits. This is why you got to have stop losses in place and follow your plan. Because I haven't talked to Don, but I know Don Fran was short the Japanese yen. Long the Japanese yen. Let's bring it up here. Let's go USD JPY. So he was short this contract. He was long the yen. That means you're short the US dollar. So he was enjoying some significant gains on this one. And all of a sudden, a lot of those gains just got evaporated. I mean, absolutely just eviscerated on this big move up here. So hopefully he's out of it. Okay, good. Yeah, you got to have a level where you say, I'm out. And that level for me, if I was in this position short on USD JPY, would have been at the latest 149. Most likely earliest would have been this 147.21 rip up. All right. Short USD JPY. He was short USD JPY. Yeah. Don has stop loss. Of course he does, right? He's smart enough to know to use stop losses. He doesn't follow Jim Cramer, who says to not use stop losses. So, let's see. Chio. I am Anthony Amorati, a French pole vaulter. Look it up. Type in French pole vaulter Olympics, and you'll see. Next on my list, that was the dollar index. Let's go up here. Gold, 3.6% for the month. Fantastic. Gold is just, shining brightly. And yeah, we had a big down day today, 1.84%, but who cares? If you're holding, this has just been fantastic. I'm loving my gold collection. I went to my safe deposit box last week and was just checking them out. I like holding the coins and checking them out and shove them back in the drawer and let them just stay in darkness until I need to collect that money. But yeah, keeps on going. That was a fantastic month and really nothing to say on gold other than you should be long gold. Are you wearing the short shorts? Yes. When I wear a costume, I go all out. I'm wearing the short shorts. Yep. And the yellow shoes. The yellow shoes were key. It's hard to find, but great the stuff you can find on the internet. Maybe I'll post a picture. Maybe I'll just put a big sensor bar over the whole region. just so we don't offend anybody. You know, people are easily offended nowadays. Life's too short to be offended by that. Got long silver today. Okay, let's check out SLV. You had, again, a nice pullback on it. What I like about the SLV chart is if you look at, I would have gone a little bit lower, but you see you got these peaks right here where we hit them as the highs back in May of 2024. We hit them again, so this is kind of the breakout trade, and now this is kind of that retest level. So buying long silver today, totally fine with that one. Now, you know, we've obviously had a pretty significant run over the past few months. You know, going back to late July, this has been a huge run for silver. But technically, what do we got? If you are anyone that likes Elliott Wave, oh, we could talk about that. Let's just draw. I think Margaret, you like Elliott Wave. You've got your 1, 2, 3, 4, maybe 5. And if this is your first pullback, there should be a bounce here. Should be a bounce to the upside. Now, if there is a bounce, according to Elliott Wave, your bounce will not go back to the high. But I'm counting more that this is on an uptrend than this is on the Elliott Wave. Oh. Can you still stand and dance in that costume? Moonwalk dance? Oh, yeah. I can do everything. I had a stripper pole in my house, and I was twirling around on the stripper pole for a while with a costume on. Good stuff. Good stuff. All right, let's go further up our list here. So we ended up there with gold, which I like the silver buy long right now. I like gold just as a long-term hold, although I don't think right now is the buy point for gold. I think silver is a pretty good one. I like that. Bitcoin, 3.26%. Been a great month. You know, it's not the typical Bitcoin numbers that we're used to seeing, which are like 10% or 20% up or down, just kind of all over the place, wild. Today, that pullback looks fine to me. I'm not so concerned with it. Again, the main number I'm looking at right now that would cause me to have a little bit of concern, although I'm definitely just bullish long term, would be 65,200. And that's just because that was that low point, turning point. I think we're fine. I think we'll have a little bit of a pullback. Again, I thought 70,000 would be our stopping point. We'll see if I am correct or not. But I think I am, and we'll see this thing bounce to the upside and beat all-time highs here by probably the first couple weeks in November. All-time highs on. Oh, I'm sorry. I'm not even showing you the charts. There you go. So there's the that Bitcoin price chart I was mentioning. Yes, it typically does. It does. What happens in the house stays. Now, there was a lot of craziness. The fun part is, you invite all the neighbors over. You have to. I have to invite the neighbors over. And so the good news is they were all having a good time. So, all right, back to this. And I won't forget to switch over the charts. We have 2 left. Crude oil. Man, what a roller coaster this one has been. I remember we had a viewer, and I can't remember who it was saying, look, I want to go short crude oil right now. And we were talking about that probably the safer bet is to go short just because that's what the trend has been doing, right? You've got to, and we're coming to overhead supply. And I said to myself, that's the right trade, but it's too risky for me. Because of what's going on in the Middle East, the retaliation expectations from from Israel against Iran and vice versa, this back and forth. You know, I would not have made that trade, even though it's the absolute right trade to make going short on crude oil as it came in overhead supply in a downtrending market like this. It's perfect. It's the perfect short. Now, longer term, what's going on here? Longer term, I guess you really have to ask yourself, what's the likelihood this breaks these lows? And I've got a low there at $63.64 is our low point from back in May. You know, do we break that? Do we break it? Do we continue this downward move in crude oil? And I think that's very possible. You have to take out that April low from 2020. But this just looks overall weaker and weaker and weaker. So sell the rallies in crude oil, but if we get below 63, 64, you know, the expectation, I think, from a lot of people is we're going to sell off aggressively. I think what you'll get if we get that low is OPEC basically saying we're going to cut production. There's got to be a floor, and I don't know what it is, but at any moment, so I have a hard time with crude oil. At any moment, OPEC can make an announcement like we're cutting production, boom, and the price is going to surge. And you could have a perfect short position get smoked because of a comment. Terrible. Merlin, you show us some pictures of your Halloween decorations? Yes. So tonight I have all the trick-or-treaters. I'm going to actually record the tunnel to the house, and just so you guys can see what that's like. And there we go. So I'll show you that tomorrow. Didn't Scrooge the Duck also like to hold and roll around in his coins? He had a swimming pool full of coins, Scrooge McDuck. I watched that show as a kid. Yeah, he did. He had a swimming pool full of coins, and he used to dive into his swimming pool, which, as we know, would be very painful. But no, I don't have that many. I've got a few. I would say I got about 8, let's see, full 1 ounce coins. I have 8, and I've got a couple 1/10 of an ounce gold coins as well. Let's see what else. That's because the guys... Wow. Oh, you guys are fun today. And finally, our last one. Let me get to this one, and then I'm going to have to wrap up the show and go decorate here. The 10-year yields. Wowzers. All right, so we'll look at a couple different things here. I'll first off bring up the 10-year chart, the 10-year bond. Now, that yield has been a pretty spectacular run over the past couple of weeks, just like that dollar index. Big surge up. Now, I'm going to leave the trajectory here, which was an analyst expectation that we'll be there at 5% by the end of the year. I don't personally think we'll be at 5% by the end of the year, but it certainly is possible. The other thing you keep an eye on is something like IYR. I think that the more you see that 10-year go up, the more likely this is going to break. And some of you are pattern people. You know what a cup and handle formation is, right? Well, this is an inverted cup and handle. It's actually a really good one. And what that means is, typically with a cup and handle, let me draw this out for everybody so you guys can get some pattern acknowledged today. You have a situation like this. Let me not snap. There we go. Where you have this higher high. That comes back and retests what's called a neckline. That moves up and doesn't make a new high. And then that comes back down and challenges the lows. So basically what this is a descending triangle, right? Gosh darn it. It basically is a descending triangle. You have the situation where the trend has been fantastic for IYR, which is real estate. It's making higher highs, higher lows. And all of a sudden, as of October 17th, not making new highs. That's a sign of weakness. It doesn't mean it's over. It just means that whatever strength was pushing this to the upside is no longer there. Now, the question is, does it break this 97.78 mark? If it breaks that, then I think you're going to see a bigger downside move. You have unfilled gaps on IOR that go all the way back to like $88. And the pressure of a rising 10-year yield and potential economic issues and employment issues could cause this to drop much further. So this is one of those kind of ominous signs for the housing market. But really, when you look at something like this with that 10-year yield surging, that's definitely going to have an impact on the housing market. Now, when we look at some of the economic data that came out this week, I got to say I was impressed. We looked at what was that? Was it yesterday? Pending home sales. Pending home sales had a big surge yesterday. That's a pretty important spike up there. Now, that's one of the highest spikes we've had since September of 2020. Does that continue? I don't know. Maybe, in my opinion, it's probably people rushing to buy something because they're under the impression that yields are going to rise, so why not lock it in now while you can? But we had, earlier the week, I thought we had existing home sales. Sorry if I'm scrolling on you. Maybe it was at tail end of last week. I think it actually was Friday. We had existing home sales. Real quickly check this one out because I'm pretty sure we had existing home sales. Where was it? And existing, all the housing numbers seem to be relatively good. So let me find it here for you. There, existing home sales was last Wednesday, and that was slightly lower. We've got this, trend going down here. So if we do see those yields rise, I would anticipate that this is actually going to start to curl back up here, and existing homes are selling hotter because the yields are getting higher. People are going to try to take advantage of it before it surges even more. And I think we had new home sales too. There you go. New home sales were much higher than expected as well. Typically what happens is these home builders like Toll Brothers, Lennar, KB Homes will offer really good specials when they feel like, we're kind of in trouble and we need to get rid of properties. So they'll offer all kinds of perks, and it looks like they're doing really well with their new home sales. So that's your economic data. But all in all, we look at this from an index perspective, it wasn't that bad. Broad market, you're looking down 1%, not too bad. But everything else, Bitcoin, crude oil, gold, especially the commodity stuff in here, you're looking at 3% plus. That's inflationary. That certainly has an impact. And then the 10-year bond yield, that's rough. Let's see. I'm going to the Dodgers parade, the World Series champs. Nice. Congrats to the Dodgers. I'm a Dodgers hater. Not really. I don't really care. I just like talking trash about Dodgers. But they earned it, man. The way they came back in that fifth inning, that was spectacular. And just poor play by the Yankees. Hate to say it. Yankees should have won that game. It was poor playing in that 5th inning. Those 3 errors in 1 inning. Come on, man. You're professionals at the highest level, and this is the highest level game. You can't make mistakes like that. So, Dodgers, cheers, they won it. I'm happy for Shohei Ohtani. I feel kind of bittersweet as a SoCal Angels fan, just because Shohei is amazing, and I'll cheer for Shohei, but I will not cheer for the Dodgers. I won't be going to the parade, but I hope you have a good time, and congrats to the Dodgers on a well-played series. This one, the Yankees-Dodgers series, was way better than the previous series. You could always double or nothing the 10-year for 5% by year end. You could take the 5%. I don't think it's going to get to 5% by the year end. I think that's 75 basis points from current level. That's a lot. 75 bips by in 2 months. I don't think it'll get there that quickly. So I still owe you a beer. Either way, we'll probably have 2 anyway. So it'll be an early payment for a future beer. So we just have to set up a time, my friend. All right, I'm going to wrap up. Let's go into your economic calendar for tomorrow. I'm already 1 week behind here because I wanted to show you the last one. But for November 1st, we kick things off with some pretty important announcements. You can see we've got non-farm employment change and our unemployment rate. 4.1% is where we're at. Look, if you look at the ADP non-farm employment change, all the numbers look good. So I don't anticipate this number rising. I just don't see it happening. If anything, based off what the ADP non-farm employment change was, JOLTS, job openings, etc., this may actually trickle lower to 4%. You never know. It's just understand that you got to be careful because this is going to happen before the market opens, right? It's going to be 1 hour before the equity markets open, so be careful with that. You also have some manufacturing numbers, which are important as well. And then really, the big stuff is happening next week. When you look at next week's calendar, you have three rate announcements. If I'm not mistaken, it's the Reserve Bank of Australia, I think the Bank of England, and then we have our rate announcement. And right now, the odds-on favorite is we're going to have a 25 basis point cut. It's pretty much priced in at this moment, which makes sense. Here's the countdown. Let me show it to you. Right now, we are looking at, a 90% probability that we're going to get a 25 basis point cut at the meeting on Wednesday. So really going to be an active week. Of course, most of the major earnings numbers are already out, so no big deal there. But this is certainly something that's going to be an exciting week. What was the date of the Fed decision? November 7th. November 7th. So there you go. You can see that right at the top there, November 7th. And this is going to come on the heels of, so not Wednesday. It would be Thursday, right? Yeah, it's Thursday. It's always Wednesday. Sorry, that was a force of habit, but it's going to be Thursday would be that rate announcement. That's when it comes out. But it's going to be interesting, guys. Obviously, I say be very careful next week. We'll talk about it on tomorrow's show, but this election thing could be ugly. It could be one of these contentious, bitter finger pointing, calling out states, calling out elected officials. Who knows what happens on this election? Just make sure you go out there and vote if you haven't done so already. All right, that's gonna do it for me. I already threw my poll over there. I was gonna go grab it for you because some people want to know about my costume. But yeah, on behalf of the Frenchman Anthony Amorati. That's my one of my Halloween costumes for this year. As I hand out trick-or-treaters candy, don't worry. I'm not going to be wearing this outfit as I hand candy out to trick-or-treaters. I will be something much more adult-friendly. How often does the Fed announce rate cuts on the same week as a presidential election? Well, I mean, at a maximum, it's once every 4 years. I don't know. I don't follow that data. I'll be careful tonight. The negative commercial killing. I know. I'm just tired of it. I don't like negativity like this. I really wish it would be much more positive. I think that there could be an election, or there should be an election, as there was when I was a kid, where they'd be like, oh, that's some very good points. Hello, Mr. So-and-so or Mrs. So-and-so. I like my opponent. I just think I can do a better job. And here's where I am going to do better. That's what it should be, but anyway. All right, that's it. I will see you guys tomorrow. If you got something you want me to discuss, email me, tradermerlin@gmail.com. Name's on the screen there, or down below any of the YouTube videos. Thank you guys so much. Have a fantastic first day of November trading day, and I will see you tomorrow.